Today we'll be analysing one of Tengah's newest upcoming private residential development at Tengah Gardens Avenue. Now, Tengah is still a very young township, and while certain people see opportunity, most others see uncertainty. So in this video, we are going to share a few things, starting from project overview to our expected pricing positioning, how the prices compare to recent Tengah EC launches, and who should actually consider Tengah Gardens Avenue.
Okay, so firstly, this upcoming plot is actually located along Tengah Gardens Avenue in District 24. So it sits directly beside the upcoming Hongkar MRT station on the Jurong Regional Line, which is also just one stop from Tengah MRT station. So this gives residents a seamless access to major employment clusters like the Jurong Lake District, as well as connectivity to the Bukit Batok and Jurong East area. Okay, so this plot was actually released under the GLS program in January 2025, with developers led by Hong Leong Group, GoCo Land and also CSC Land, which actually secured the site at $821 per square foot per plot ratio. And this land is actually zoned for residential with commercial on the first story and can eventually yield about 860 units.
So here are our expected estimated launch pricings for Tengah Gardens Avenue. So to estimate the PSF pricing for Tengah Gardens, we actually take reference from the developer's past launches. So Tengah Gardens Avenue was awarded at $821 per square foot per plot ratio, which becomes the baseline developers use to work out their pricing. So if we look at other past Hong Leong and GoCo Land launches such as Springleaf Residence and Lentor Central Residence, we see that from the land price to the launch price, these developers generally apply a multiplier of about 2 to 2.2% for the lower bound of the pricing, and on the upper bound is about 2.6 times. So applying the same multiplier to the land cost of Tengah Gardens Avenue of 2.2 times to 2.6 times, we actually arrive to roughly about 1,806 PSF to 2,135 PSF. So this range actually already takes into account the construction costs, financing and marketing, as well as the developer's profit margin expectations. So adjusting to the average prices that we currently see in the OCR, we arrive to an estimated launch price of about $1,900 to about $2,150 per square foot. Do take note, this is just our estimation based on the developer's past pricing behavior, and actual pricing may differ.
Okay, so next, we all know that actually the past few launches in Tengah has been EC projects, and the EC buyers have actually entered the market with a lower PSF price. So today we'll actually delve into what is also a reasonable price gap between the EC and the condominium projects in the same area, and how does Tengah Garden's estimated prices look compared to, of course, the EC projects that has been launched. So if we were to draw out Canberra area, which had province residents, which is the EC, launching the same year as condominium projects, the Commodore and the Water Gardens at Canberra, we can actually see what is actually a reasonable price gap between the ECs and the condominiums. So province residents actually launched at an average price of $1,164 per square foot at the start of 2021, while the Commodore and Water Gardens actually launched at $1,514 per square foot and $1,457 per square foot respectively in the same year. So the owners of both Commodore and also the Water Gardens have actually been sitting on very healthy profits today as they actually entered the resale market. So if we were to look at the price gap between the EC and also the condominium projects, this actually comes up to a difference of about $300 to $350 per square foot respectively. So today if we were to draw back to the Tengah area, we can see that this is actually the table that shows the prices of the ECs that has been launched in ECs within the past 2 years. So as you can see, if Tengah Gardens today launches at the estimated PSF prices of $1,009 to $2,150 per square foot, this will actually set a price gap of only about $250 to $300 per square foot from the recent ECs. And this is actually in fact smaller than the price gap that we have seen between the condominiums and EC in Canberra. So if the developers really launches at this pricing, I feel that it is actually a very safe price gap. It's a very safe price to enter, and buyers definitely do not have to worry about that.
So of course, we want to consider our exit strategy when it comes to making an investment, buying into Tengah Gardens Avenue. And so let's have a look at the situation in Tengah. The first wave of BTO flats launched from 2018 to about 2021, and they are expected to reach their 5-year MOP from 2028 to 2029 onwards. So these are potentially some of our HDB upgraders and our potential buyer pool. Meanwhile, the only EC in Tengah currently which will fulfill its MOP will be Copen Grand, and that will be expected to MOP from 2030 onwards. while Novo Place and Auto Place will likely start to fulfill their fire MOP from 2032 onwards. So this actually provides our first window of exit for the buyers of Tengah Gardens Avenue, given that we will likely clear our seller stamp duty period in 2030 and there will be little competition in the area when it comes to resale condos in the area. Also, with the staggered timeline in the private supply into the resale market, this will also ensure a smoother absorption of units when they enter the resale market. So of course, with the consistent supply of MOP flats in Tengah, this will lead to a constant staggered supply of upgraders in the market and allows for consistent demand for this development as well from 2030 onwards.
So after discussing the price point and also the exit strategy, we would like to actually end off this video with who are actually the buyers that should consider this project. Okay, so firstly, for own stay buyers who are actually website lovers and don't mind staying for a period of time, eventually when they exit, the HDB flats will actually MOP and definitely they will actually have the upgraded demand from the HDBs. Okay, secondly, for investors who actually are looking at short-term investment, I think this project actually offers a very short first exit window opportunity for such buyers. So do note that for such buyers, do go for bigger units because as you know, the nature of this area is more family oriented. Buyers who eventually when they are looking for a unit in the resale market, they are definitely looking for bigger units as well. Okay, so we have come to the end of our analysis video. So if you have any other questions or you do wish to know our opinions for any other projects, do reach out to us. Our WhatsApp is just over here. If not, we'll see you in the next video. Bye!